The first ever football coach in Pop Warner tackle football, he used to tell us, he said, you're going to get hit. You're going to get hit hard. You're going to get injured sometimes. Don't fear it. Embrace it. It is part of the process of playing tackle football. And when you're in the financial markets, when you're in the stock market, and when you're in this business game, you're going to take some big losses. You are going to go massively down on positions, on your accounts. It is part of the process. And what I want to share with you in this video is how do you get back to where you used to be? I almost guarantee you every single person watching this video right now, your account probably hit an all-time record at some point in 2021. And since that time, it's likely dropped significantly. The question is, how much has it dropped? And everybody's out there looking and they're like, how do I get back to where I used to be? And in today's video, I'm going to share with you exactly how you do that. As somebody that has gone through this process several times, and will go through this process several times in the future, don't ever fear this. Don't ever think down on yourself when you're in one of these situations, because this is part of the process. And if you want to be part of this money game, if you want to be part of this investing game, you have to embrace this and you have to accept this. That's the bottom line. Every single one of the greatest investors ever and business people ever took insane losses you can't even fathom or imagine. I don't care who we're talking about. Warren Buffett has lost fortunes on stocks. He went down massively a million different times. He can share with you exactly how many times Berkshire stock has went down 50+% over time. It's a lot. Folks like Peter Lynch. Peter Lynch had a great speech many years ago in which he was describing his biggest investment, where he was sticking a ton of money from Magellan back then, and he was essentially putting the stock, and it fell like 80% in a matter of months. And he was just like, it was an insane situation. Every single person on that Forbes list took massive L's. They made huge mistakes. They made huge blunders, and sometimes it was just the market worked against them. Every single one of them. So if you can't embrace that, if you can't accept that, you can't be part of the money game. You can be part of like the savings game of like throw money under a mattress or something like that. Even if you're part of the index fund crowd, you still have to accept that you're going to go down massively sometimes. And sometimes you're going to go down for many years. And that is part of the process that you have to work through, and you have to accept that as an investor. Until you accept that, you can't move to the next level. I learned to accept that a long time ago, and I'm going to share exactly how I got back in different situations in the past and kind of how I look at this. So I hope you guys enjoy this video. I hope you get a lot of value out of it. This is one you're going to definitely want to watch all the way through and get as much value from this baby as possible, okay? So first thing I want to start here, which I think is very important, is just kind of looking at the devastation, right? It's been a very devastating year. Stocks like Amazon. I mean, when Amazon's been almost cut in half in a year, it's been a rough year, right? Netflix stock's been over cut in half. That stock was down 70% at the lows earlier this summer. AMC stock, obviously, which is a popular one. I just put some popular ones up here. Tesla, Palantir, obviously Bitcoin has fallen massively. Meta stock, SoFi, Ethereum, obviously the chef, right? I mean, just you go through stock after stock, Shopify, you see 50, 60, 70, 80% moves down, just stock after stock after stock. It's been a wreck, a mess across the board this year, okay? Absolute devastation. Now, to add insult to injury, folks went into this year on insane amounts of margins. Before we went into 2022, we were peaking out at $900 billion plus of margin debt outstanding. $900 billion plus. This is as of September. These numbers always lag, unfortunately, from FINRA. But, I would say right now we're probably at $500 billion-ish. Somewhere around there as of right now as far as margin debt goes. So we've probably knocked off about $400 billion in my personal opinion. If we could see an updated number here today, we probably knocked off about $400 billion in margin debt. But that's the situation we're in, because some people like to play the game extra dangerous. It's not just enough to own individual stocks. It's not just enough to even own riskier stocks, but then they want to also obviously margin out to the max on that, right? And then some folks, that's not enough. So what they end up doing is they load up on options, and they end up making their stock portfolio into an option portfolio instead. And then all their money's tied up in options, call options, rather than stocks, right? Because heck, you can make so much of gains, right? And if we look at what happened in 2021, a record 39 million option contracts traded daily on average in 2021. That rose 35% from 2020, which was an insane year for options as well. Retail investors now account for 25% plus of the trading activity in 2021. I can tell you that's not going to be that number moving forward. That's for dang sure. So you had a dynamic where, stocks obviously got wrecked. Folks that were on margin maybe lost their entire accounts, obviously, right? Especially if they were heavy on margin going into this year. And folks that were obviously loaded up on options and call options and put their, all their money into options. I mean, all those option contracts are pretty much worthless now on almost every single stock out there, right? And especially if you're the type of person that likes to, turn your entire portfolio into an option portfolio, guess what? You're going to do that with growth stocks, because you're not going to do that with Coca-Cola and Caterpillar. You can't even get to that place. Those type of investors, they're not into that game. They're into just buying the stock and holding it over many, many years, right? So naturally, it's been pretty darn devastating, right? So let me kind of share with you my thoughts on this, and I shared this with the entire private group, and I want to share this with everybody because I think this message is incredibly important, because I know there's going to be a ton of people out there that are thinking about how do I get back to where I used to be? Okay, so the question almost every single investor is asking themselves going into 2023 is, how the heck do I get my account back to where it was in 2021? As someone who's had asked himself this question when I first got in the market, because when I first got in the market, I got hit. I had to ask myself again in 2015. If you don't know anything about my story, in 2015, I went, basically I started doing trading. I took an entire year and a half off from work, and I would just sit in this office all the time and I started trading, and I started doing everything that I went against, everything that ever made me successful. I started doing margin trading. I started doing swing trades on earnings and things like that. It was a disaster, absolute disaster. And I tore up my portfolios, absolutely tore them up on doing just stupid stuff I should have had no business doing back then. Again, in 2018, I had to ask myself this. Number one, it doesn't happen overnight. If you think magically you're going to get back to record amounts next year, you're going into this with the totally wrong mentality. You have to view investing as a process. No one in the game of investing hits record after record after record. You are going to have some big down years. You're going to have a 2 to 4 year window where your portfolio might not hit a new record. That is okay. As investors, we must accept that. If you don't, then this game will stress you into oblivion. And absolutely, it will. Because imagine a scenario, right? Imagine a scenario where the economy becomes a disaster zone in 2023. And as the year goes along, it just gets messier and it gets messier and it gets messier. Unemployment starts to rise massively. Corporate profits start to fall massively. And then going into 2024, it's still ugly, right? Imagine a scenario like that. Well, maybe, the indexes all get hit much more. Maybe stocks get hit much more in a scenario like that. It's a possibility, right? Until the Fed starts bailing things out. And so that's one of those situations that you have to be mentally prepared to be down for several years. When you go into a massive recession, that's usually what happens. You're down for several years, and you just have to accept that. Once you accept that, you can begin the build back process, I like to call it. Okay. Number 2, never stop buying assets and stay diversified. Have your life set up where you're able to buy fresh assets every 2 weeks or at least once a month. Now, the key here is diversified, okay? Buy and hold diversified portfolio of stocks does work. The death of buy and hold investing has been greatly exaggerated over the last 70 years. And you always go through these time periods. And I feel like we're going through one of those right now where people have a disbelief in buy and hold. Why? Why do people have a disbelief in buy and hold? Because everything's going down massively. So naturally, they're like, oh, why didn't I trade out of all these stocks at the beginning of this year or at the end of 2021? Or why didn't I do this? Why didn't I do that? And you start to look at trading as maybe that's where it's at. Oh, a trader. I could become a trader. This is what happens every single time. And I'm sure people thought this in 2008, 2009 when the market was getting wrecked, in 2010. So what does buy and hold do? I'm sure people were thinking that in the tech bubble blow up. Every single one of these situations, everybody doubts the whole strategy of holding for the long term because they're like, why am I holding for the long term and I keep losing? Like, why am I holding this stock? Why it keeps going down? So it's just funny how the doubts come in that situation, and people don't realize they're putting themselves in a psychological damage when they start viewing it like that, because then they're so much more likely to start trading in and out, and then they're ultimately going to end up producing less returns over the long term. Like, no doubt about it. That's just like, that's the way this whole game works, right? But being diversified is key. I see so many people always want to go so like insane into a stock, right? There's nothing wrong with betting a little bigger on a stock, but there's a big difference between putting, 50% of your portfolio or 30% of your net worth or 40% of your net worth into a stock. I see people do this on the regular, and it just kind of blows my mind. You got to understand, I don't care what stock you hold. It could be the safest or the safe company. It can be the most attractive deal in the world. You got to understand, like, things might not work out, and the stock price might go down significantly, and maybe the business model doesn't even work out. I've seen it where companies have went from incredible profits, making so much money, phenomenal margins, phenomenal revenue growth, to revenue growth is not there, margins are deteriorating, and profitability goes from, hey, big net income to now net loss. I've seen the amount of companies I've seen in my past 14 years being in the market. It's ridiculous. So being diversified gives you the chance to fight another day. I mean, obviously, so many people went all in Tesla or near all in Tesla going into this year. And for what? The stock, have their earnings been amazing? Sure. But the stock was already priced for perfection going into this year, and the stock price is down 50+%, right? Meta stock, it was a very attractive valuation even going into 2022. But it didn't mean anything. The stock still, was down 70+% year to date just a few weeks ago. 70+%. 70+%. So, this is a key to, you have to be diversified in the markets. And that's something I've always preached, and I'm going to continue to preach. I love to buy a basket of stocks. And when you see me even do the buy orders, right? When I'm buying, many times I'm buying for 4, 5, 6, sometimes even 7 stocks at a particular time, all in one day. So it's not like it's just like, I'm going all in one stock. Like, that's very rare occurrence that I'll buy just one stock in one day or something like that. And ultimately, I'm building out a portfolio. Like, you look at the public count, for instance, I hold probably 15 different stocks in there, and they're all in different industries, and they're all at different levels. Some of them are, extreme cash flow companies, some aren't, some are a little more growth, some are value. You have a mixture in there. And so diversity is absolutely key to making it through and to learning how to fight another day. Okay. Will all your assets or stocks have success? No. Some will fail. That's okay, as long as you're diversified and the other ones make up the slack. Number 3, forget about your old number. Focus on a new goal that is more achievable, then beat that goal, and then set a new goal. Let me give you an example. Back in the day, I had a 6-pack. My arms were well defined, and I could run a 4.5, 40. Okay, Jeremy, okay. Now, let's say I wanted to get back in as good a shape as I used to be. Well, the worst thing I could do is just focus on trying to get back to the old me tomorrow, because I can tell you that's not going to happen. I need to focus on one step in the right direction. I need to focus on, I get a little faster, I get a little better shape, I get a little more cut and defined and things like that, right? Make small goals, hit those goals, and then set a new goal. Over time, if I put in the work, I can reach my ultimate goal. Control what is controllable. If you listen to the best coaches in the world, and let's say athletics, every single one of them echoes the same thing. I don't care if you're talking about Nick Saban or Bill Belichick or whoever it is, okay? They will always say, control the controllables. You can't control what is out of your control, essentially. And so there's no point in focusing on that. There's no point in focusing on whatever might happen or not happen in the market next year, because we can't control that. The S&P 500 could go up 20% next year. It could go down 20% next year. We can't control that. We can't control that. We can't control how much the U.S. economy grows or shrinks next year. We can't control how much money, the Fed tries to take away from the system or add to the system. We can't control what the government does. We can't control any of that at the end of the day. We can control what we can control, and we have to accept that, and we have to focus on that. Focus on that, okay? Control what is controllable. You can't control if the stock market goes up or down 20% next year. You can control how much you invest, what stocks you buy. Control what you can control and hit your goals. Number 4, Do not do negative self-talk. I'm so dumb. I should have known better. Why do I always make mistakes? Maybe I'm just unlucky, etc. By the way, in the stock market, there's no such thing as really luck and unluck, okay, or unlucky. And at the end of the day, there's going to be some time periods when you have really good luck and you have really bad luck, okay? I'll give you an example of a scenario where I had bad luck. That would be CCL back in the day. CCL was a stock I got in right before Rona. And I started buying the stock and loading up on CCL shares right before a once-in-a-100-year pandemic came around. And are you kidding me? Super unlucky. But there's been plenty of other scenarios where I got lucky and a company got bought out or the company executed way better than I had forecasted for, right? So I can look at my past 14 years in the market, and there's going to be some times when, man, I got unlucky, and sometimes I got really lucky. So at the end of the day, it's all a wash. It's all a wash sale in the end in that whole situation. Don't think you are the only investor that goes through tough times. Every single investor does, even the greatest of the greats. Imagine what investors felt like in the tech bubble when the NASDAQ fell over 70%. Imagine what investors felt in the great financial crisis when the S&P 500 fell over 50%. The S&P is supposed to be the safest thing. To lose over half your money in 18 months on the safest thing is nuts. Imagine how real estate investors felt when they went from owning 6 homes to 0 homes in less than 2 years. And I mean, there's a lot of those folks that went belly up in that situation. And by the way, we might have another one of those situations on our hands that's going to start playing out in 2023, just so everybody's aware of that, okay? But, situations where, these real estate investors just get over-levered in the market. And next thing you know, this was very common in the financial crisis. These folks went from owning all these different homes. Oh, I have a $3 million real estate portfolio to months later, I lost it all. I have zero, like Robert De Niro back when he was in Last Action Hero. Okay, he was never in that movie. It just rhymed, all right? So you got to think about that. How did those folks feel? They were over-leveraged and lost everything. Brush your shoulders off. You're doing okay. You will make it. You will hit new records down the road. And that will feel amazing. You will do it. Number 5, acceptance and learn. As humans, we will always learn the most when we're put in adverse situations. Guess what happened less than a year after my embarrassing failed GoPro investment? I found and invested in Tesla and Elf stock. Oh my gosh, 2 of my biggest winners ever. Guess what happened after my idiotic 2015 year in the market? Started my real estate marketing company and YouTube channel. Guess what happened after my rough start when I first got in the market? I got the job at Quick Trip and then started investing heavy into stocks like Trinity Industries, Cabela's, Hansen's Natural Beverage, which nowadays is Monster, and others, right? So in every situation, you're either going to be the person that kind of looks at it as, you know what, I'm going to come out of this, I'm going to emerge stronger, I'm going to emerge smarter, and I'm going to get to work on this. Or you're going to be one of those people that just kind of gives up. There's only 2 ways. You're either going backwards or you're going forwards. There's no in between in this situation, right? And so whenever I look at myself in adverse situations, it's always forward. It's always forward, getting back to the basics, getting back to buying the dip, focusing on the right things, and learning from and accepting whatever I made that mistake in the past, whether that was on me, whether that was luck or unluck or whatever you want to call that. At the end of the day, it is what it is. Learn, move on, move past it. Because until you put that in the past and you just learn from it, you can't move on, right? It's no different than holding on to a past girlfriend or boyfriend you had, right? That you might have been in love with and they break up with you. And it's if you keep holding on to that, you can't move on to the next person. You can't give yourself a chance to fall for another person, right? Because you're still clinging on to this thing that's in the past. You have to move past that. You have to accept it. And once you do that, you can start moving forward in this situation, okay? Do you know what Steve Jobs did when he was kicked out of Apple in 1985? Which was his own company. He surely didn't sit around and cry about how he got kicked out of his own company that he started. He started a new company called Next Computer. Next ended up being bought out by Apple many years later when Apple was near bankruptcy. And Steve Jobs went on to build back the biggest company in the world. Acceptance and learn. There's one direction, and it is forward. So for everybody out there that has gone through a brutal year of 2022, just understand there's brightness on the other side. And don't think you're going to magically get it back all in the next hand. Okay, I took poker serious for about a year, and I just took, I just thought it was fun, just kind of learning, how the sport of poker is done, and playing on a high level and those sorts of things. And one thing you got to understand when you play poker is if you get, if the cards don't come your way one hand and, you got beat, you're not going to magically get all those chips back in the next hand. You've got to focus on playing the best you can play and controlling what you can control. And if you play, well enough, you'll end up getting all your chips back plus a whole lot more, right? So I think that's the best thing I could say to everybody out there right now, as we, kind of, because I'm already starting to focus on 2023, where do we go from here and things like that. And that's just where like my mentality is. Learn from the mistakes that were made, move on, and go ahead and, build back bigger and better than ever. And it's not going to happen overnight. I can tell you that. Doesn't happen overnight. But over, a few years, next thing you know, all of a sudden you're like, oh, wow, I put in all this work and now we're back to this level. And then you go to some new gigantic level. And then guess what? You fall back down again, not to the lows you were at previously, but you're going to fall from your record, right? And then you're like, crap, man, fall from my record. And then you're going to climb back up, and then you're going to pass that record, and you're going to go way beyond it. And then you're going to fall down again. And then you're going to, that's how the money game should work. It's not in a straight line. Anybody that ever told you this is a straight line game lied to you. This is not a straight line game. You don't just go up perfect. If you look at every single individual's net worth over time, and you look at, go to the Forbes list, look at every single person on that list, and look at if you drew out their net worth over time, there's not one person where it just goes up straight. That's not the way this works. It's never been the way this works, and never will be the way this works. It's going to be some massive dips, and there's going to be some small dips in there. There's going to be some mid-sized ones. So 2022 for a lot of folks, it's a big one, right? It's a huge one, including myself. This is the hardest I've ever gotten hit in the market. But it is what it is. Acceptance, learn, move on, become a better investor, become smarter, and get even better. And, something will come in the future that knocks us out again. And it is what it is. That's just part of the process. So, hope you guys enjoyed this as always. I appreciate everybody that watches the channel. I hope you got a lot of value out of today's video. Smash a thumbs up if you did. Appreciate everybody that subscribed to the channel also. If you didn't already know, we got a massive, epic, once-a-year Black Friday sale coming up for the private stock group to get access to my private Discord chat, to get access to all our different course curriculums and understand everything that's up here in those course curriculums. Much love as always, and have a great day.